Hello, warriors. How's everyone doing? Good morning. Good morning to you. Everyone doing okay? See my screen? Hello, Ren, Didier. Okay, I'll send you my email, or you could contact me on Skype. I'm not a tour guide though. Hey, Brock, Marco, Hugo, Arena. Hello. Paul Smith. Nice to meet you. Tomas. Nice to meet you. Hi, Kevin. Alexander. Okay, so looking at a short-term look in the S&Ps, and you know what? When Blake and I were talking about 3,900 yesterday, there was no way when I was thinking about that being a sell zone on Saturday that I thought that we would get there in a day. Okay. So just something to keep in mind, the weekly off number is 390360. And, we traded above it here. Right here, it's about this moving average, coincidentally, the Friday off number. And the off number was one of the reasons I thought we could get back to 39, and it was above the market. So we'll see if we have a failing rally from here or not. Okay. I still am going to give a bearish outcome the benefit of the doubt. Wrong over last week's highs where I sold it here. So anything that I sell, here's my fail safe up here. Everyone see that? And I keep waiting for, a break in the dollar to buy because, I'd still like to buy this dollar. That's almost kind of a bullish sign when the dollar's not giving you a chance to get in if you didn't react right away on Thursday or Friday. But there, I'm going to try and be patient. No, I'm not going to try and be patient. I'm going to be patient and see if we get some type of pullback here. Canada is kind of playing out according to plan. I'm thinking that maybe this was A and this is B, and we could still have something like this from here, which would take it to right around the between the 50% 61.8 levels where I'm going to be interested in Canada. And despite crude being up today, to me it looks like it's a decent top. There was like some kind of neckline at 61-ish that it took out on a shorter term. So I think you could sell rallies in energy too, maybe up here around 61.70, 61.50. I might be interested in this. Yen to me looks like it could be a decent turnaround Tuesday trade only for a scalp because, I do think that even though rates are popping a little bit today, like 10 years up a couple here, that there's a chance that the highs might be in and that we're going to work our way back down towards, 120. Although this would argue that we're not done. Anyone know why? I mean, this is not the type of setup for a short, is it? Because up here we confirm the high. So that's what I'm trying to get across. Maybe this was just ABC and we're going to go again. So it's an IDK. I don't, I have no problem saying I don't know. But this is pretty long in the tooth, and we could get 50 pips out of it. Not looking for a ton. Just take your 30, 40 and pull your stop to break even, especially if we get back down to the 650 level. Then maybe it could, pull back to 105. But I think this is an ongoing bull market. Look at the weekly. All right. Held where it had to. It's a huge triangle. So anything on the short side is counter trend to me now in the end, because but we could have a pretty good one because we've had a pretty good wave up in 10-year yields from 0.4 to over 1.5. So a pullback to 1 is just a pullback in a market that's already turned. And this is something to keep an eye on in the gold. For your gold bulls, I was looking for 1680. Looks like we have 2 drives here, but check this out. Yesterday, all we did was pull rally back to the breakdown and failed for 2. And looks like we could have 3 down here. Towards 1680 was some fib number that I had for a while. Oh, I actually have a wedge line coming in there too, around 1687. So be a good place to cover up your shorts in the gold, since we already have a 2, right? See this? 1, confirm low, 2, diverging. If we get one more low towards 1680, perhaps we don't take out the 30 level. Any questions on anything I've talked about? I'd like to buy a break in Dixie. I'm not bearish, I'm bullish. I think before the short squeeze is over, and I don't cover platinum. I think we're going to have a very powerful bear market rally. In the Dixie, I still think 95 is viable for Forex. Okay, that's just my opinion. As long as last week's low holds, last week's low at 78.6, right there. See this? We talked about it. Didn't know it was going to turn into anything. And then last week I said 90.40 was key. It was rejected once. And then next time through 90.40, it became a straight line move. Okay. All I have are delayed quotes on copper, Brock. Maybe one of the guys will cover it. Anyway, thank you everyone for your attention. And I'm going to turn it over to Blake now. Good hunting today on Turnaround Tuesday. And you know what, guys? If you haven't yet, sign up. Who hasn't signed up? And I don't know, I might get in trouble for doing this, but for a 6-month or 1-year deal, we'll give you the promo discount if you do it today. All you have to do is go to right here, go to customer chat, and someone will work with you to give you a deal on nothing shorter term than 6 months or a year. Deal?
Hey, you just said what? I'm sorry.
Oh, I said that if anyone missed that, our last promo sale, that we would open the door for 6-month and yearly subscriptions for a discount today. Today only.
Do that. You're grounded.
Oh, okay. Anyway,
grounded.
Anyway,
yeah, since Dale mentioned it, I obviously can't take it back. So,
all right. I don't do it often.
Listen, if you want to do something nice and allow people to do that, Dale, I really have no problem with it today.
I knew you would,
because the market's not doing anything. So this is our way of thanking you for being here when there's not a whole lot going on. No, I'm just kidding. There's a little bit going on.
Yeah,
there is.
I know.
So what Dale's saying is basically, if you guys missed the last special that we did, just reach out to. We have a little chat box on ForexAnalytix.com. When you just log there, you can actually chat with somebody from customer service. Our staff is they're remote, so obviously they might have stepped away from their desk, but just write in the chat box and they'll give you we'll authorize them to give you a special, because then they come back round back and check with us. So yeah, it's all good. So how's it going there, Dale? And Stelios, it sounds like you're here. I wasn't sure if you were going to be here or not.
I am. My daughter broke a really nice MacBook Pro, but it's okay. I'm trying to
So
figure out a way
how
for
did
her
that
to.
happen?
It's okay. We dropped it.
Oh,
Anyway, it's okay.
is it completely done?
Well, it won't turn on, so and it's a shame because it's a relatively new one. But anyway, it's okay.
Yeah.
It's all right.
Oh, are you sure it's okay? Not for me, man. That
No.
happened. I would like. I know it's your daughter and everything, but man, she'd be sitting outside for a few months.
You
Oh, man,
Marine. Yeah, sure.
It's
If you would
it's
have had a
really
little
tough.
girl, you would have spoiled the hell out of her.
I know. I'd have been like, it's okay.
Hey, what
Yeah.
happened? What did I miss?
Nothing. Don't worry.
Oh, hi, Steve. How are you?
We are
Look,
minus one
he's
laptop.
not even back from the hospital for 2 minutes, and he's like, I got to jump.
Yeah,
on the
exactly.
webinar.
5 minutes. 5
It's like,
minutes.
I've been home for 5 minutes. I'm going to jump on a webinar. Welcome back, Steve. How are you?
I'm so glad you're home, Steve. There's no place like home, especially after being in the hospital, right?
Very true. After 8 days, yes.
Yeah.
Yes.
Well,
Indeed.
good. Hey, you know what? I'm gonna give you free reign, Steve, to talk about anything that you want to talk about. Have you looked at the markets at all? Are you ready to
What
tell
kind of a question is that?
what to look
He's
at
been
right
trading his balls off. Excuse me. He's been trading.
Okay,
No, I'm not going to lie to you.
Wait,
I haven't been.
hey, before we get into all this crazy conversation, let me talk about a couple of things really quick that actually matter. People are like logged on, listening, want to, kind of see what's up with the market. I want to share with you guys. I've got some conflicting signals today, and this is what's got me, kind of. I'm really not too sure what to do at this moment, and here's the reason why. If you look at the S&Ps, the S&Ps we've bounced back, but I still think that we're in a, you could argue we're in like just a triangle consolidation, which I actually think we are. So if you can see this ascending wedge, we're building out this triangle. I think resistance is right ahead. Just keep in mind the real big reversal candles that we saw and reversal signs that we saw at the end of last week. So you got to factor that in. It's not like that was a,
Mirage.
Yeah. I mean, this move, like, I'm just going to take the Aussie here. And I know that the RBA met last night. That is a big candle.
Yeah.
The cable, big reversal. Euro, big reversal. Kiwi, bigger reversal. Dollar Canadian, huge reversal. So you got to factor all of this in. Equities, that was a big, big down candle.
Well, you talked about it getting back to 3,900, but I didn't think it would do it in one day.
Yeah. So yesterday, it's first day of the month, everybody piling in, probably a lot of flow related moves. Anyway, here we are, but bouncing back, and the S&P, and I think is up against probably pretty key resistance around here, around this 3,900 to 3,920, 3,930. Yet I look at the euro and I think, holy cow, man, this thing is weak. I mean, we probed 120. Now you could say, well, and this is where I'm a little conflicted, we had a false breakdown. So, we had a false breakdown. It didn't, it's going to bounce from here, but I don't know if I'm necessarily in agreement with that, because if you look at, the bigger picture here, the euro is actually trading pretty heavy, and we've already kind of probed down below 120. And I think that this is pretty key support. If the stock market starts to roll over and we actually start to see this, sell off towards, 3,800, my opinion is the euro, for example, is going to trade back below 119.50. Then you have the cable that's got this bear flag pattern. Then you got the Aussie, which probably will come out and take out this trend line. And then you have the Kiwi, similar trend line that we're trying to, we're probing right now. So I'm a little conflicted, because I don't think that stocks are going higher. And if stocks were going higher from here, like, I know we had a big bounce yesterday, I'm talking about today, for the next, rest of the week. If I thought that stocks were going to be moving back to all-time highs at this moment, I would be like, okay, it's time to short the the dollar and buy some euros, buy some Aussies, buy some Kiwi, whatever. But I'm not in that camp. And I look at the stock market, and I think the stock market is at risk. And, this is where you start looking at, the other markets, like, you look at the NASDAQ, we're probing, the underside of this, a broken ascending wedge. The Dow's just kind of, bebopping around. It's, kind of consolidating where it was at. So, you get some of these equity markets start to show some weakness up here. I wouldn't want to be short the dollar. And I know it's pretty tempting because you look at the dollar index and you go, well, the dollar is, right up around 92. And we all know that this 91 or 91.75, 92 level is going to be pretty key resistance. But how about if it's broken?
Yeah, that looks like
Dale,
an
you just
ascending
said-
triangle, buddy.
Huh?
Ascending triangle with bullish implications.
Yeah, I mean, we could have, this is, and you were just talking about how we could have a massive, squeeze bear market rally. Remember, the market's pretty short the dollar.
Still,
I mean, you can look at it another way. Like if you look at the CFTC data, everybody's long the euro. So massively.
Massively is correct.
What's that?
It massively is correct.
Yeah, it's
description.
It's a very, very, very big euro position. So, and that's, I'm sure that it's, it's not just the euro. It's probably pretty bearish the dollar. What people expect it to happen when you're at all-time highs in equities. So, could we get a bear market squeeze in the dollar index? I sure think so. And that's why if stocks start to move lower from here, I think the risk is you start to see a squeeze higher in the dollar. And so that's like the point I want to make. Now, Steve, you're back. No, he's not back.
I certainly am.
Oh, Steve is back. Okay, so now I'm glad to have you back, Steve. I know we all are, but I had to get that off my chest because I wanted people to hear, kind of some ideas going into today's trading day. So now that you've had a week sitting around doing nothing, pretending to be sick in the hospital, you had all this time to think about what the market's going to do. What do you think the market's going to do?
It's nice that we finally saw the beginning, hopefully the beginning of some volatile moves. I also believe, as you do, that it is very likely to get some follow through. I don't think we can be 100% safe yet that the whole risk trade has broken down, and I have a specific formation I'm looking at, and I'm going to show it later in the S&P, which for me always remains the risk barometer. What I do think is the case is that I do see especially gold and platinum being at very interesting buying zones. So for me, that's definitely one thing I'm paying attention to. And I do agree that, irrespective of what happens, this is not anymore the time to be selling dollars, not until we see some kind of a rally. And I don't think what we've seen so far is enough of a rally to be considered a proper correction after all this period of weakness. Now, my long-term thesis hasn't changed a bit. For all the reasons I've mentioned multiple times, I remain very bearish the dollar and very bullish commodities, commodity currencies, metals, so on and so forth. But I do think that this is a very, very dangerous proposition in the short to medium term.
Well, why don't you take over the charts and show us what you're looking at with the S&P?
Absolutely.
Welcome back, Steve.
That's Steve. Great to have you back.
Yeah, man.
New man, new looks. You've already
Oh,
seen
yeah.
it, right?
Yeah,
And Amira has missed you going over platinum.
but old cuts, as you see, equally, uh, irritating or lovable. You can see it as you wish. So yeah, I'm back in my office and I feel fine, which is a good thing, I guess. So this is what I'm looking for here in the S&P. This trend line, which passes perfectly from these lows and this previous low, which produced another low, purely from a candlestick perspective, somebody can recognize here a morning star formation, quite a formidable one. And this is the only thing that's a little bit holding me back to, call for a, much larger move lower in risk, which in my opinion, as I've stated multiple times in the past, is a prerequisite for a strong move higher in the dollar. So yes, the dollar has had a nice breakout from this triangle. Theory would indicate that that should be good enough for at least a higher high, in this case a move towards, I would say, the vicinity of like 92 to 92.50 at the very least. Of course, this move can unfold, to be a stronger and more complex one, right? I mean, we might get like something, something like this. Before we get some type of a high and a turn lower once again.
Like it, yeah.
Yeah.
That's Celio's macro call too. The rally.
Yeah, no, I'm 100% with Celios then. Yeah, which
I
most
think
of the
that
times
goes back to a breakdown on the trend line.
But as I said before, what is the key chart for me at the moment? This one.
S&P.
Now, I know that the Nasdaq is showing us something different, right? The Nasdaq, somebody can easily make the case that has already broken down, retested the breakdown level, and perhaps it's on its way to retest it once again. And perhaps the Nasdaq will end up leading, this move lower, this corrective move lower in risk assets, and this corrective move lower in the dollar. But since S&P has and will remain, a more broad index, which, includes and involves companies from, all industries, I'd rather play it safe and wait to get the signal from, this one than anything else. Now, what I mentioned before having to do with interesting areas, having to do especially with gold and silver, the reason I mentioned that is because gold made it to come very, very close to this channel trend line support. Actually has stopped so far in the 127% extension of this last move higher. Of course, it has a little bit more room to extend. It could extend towards the confluence of supports roughly at 1680.
Like it.
5. And the reason I also mentioned platinum as being an important juncture is the confluence of supports you see here. So we have
there. You go, Amira. Amira has missed your platinum. He hasn't slept for a week, Steve. Platinum analysis.
So this horizontal, I'm monitoring this channel, which so far looks corrective, and this horizontal support area. Now, admittedly, there is nobody telling us that this cannot evolve to a little bit more complex corrective move lower, but definitely a first area of interest is exactly where we currently find ourselves here at around 1170. Now, admittedly, it's not a surprise that crude oil, as we had mentioned, followed risk assets lower. Keep in mind, though, and this more or less ties up very nicely with the S&P outlook, that crude oil, despite the 2 strong day move lower and the nice evening star formation reversal that it posted at the end of last week, remains within this ascending channel. So exactly as the S&P remains within that ascending wedge, we have crude oil, which remains within this ascending channel. So crude oil and the S&P so far have not given us a final confirmation that, this is it. We've begun something bigger. We might have, but I would want these two markets to confirm. I think that if one does, the other will do, more or less at the same time.
Actually, crude held up pretty well while there was some risk off going on last week.
Yes. Actually responded a little bit later. We've seen, and we've talked about that in the past, that sometimes crude leads the S&P by a little bit, in some cases even a few days. Sometimes it's the other way around. But a prolonged decoupling between the two of them is not something that's that should be expected. So when one really turns, it's a matter of time for the other one to follow, and usually this kind of divergences create very nice opportunities to do some catch-up trades with a much better risk-reward ratio, because, for example, the S&P might have turned lower aggressively and crude not. So crude still gives you a much better risk-reward to be short, for example, or vice versa, right? Or it might happen the other way around. Now, since we're talking about some other asset classes, the natural gas market has also pared back some of its gains, but nothing has really changed here, meaning, we're still above the broken channel. So I still don't see, the past 3 days definitely don't show us something bullish in the very short term. Somebody can say that we're building a small bear flag here, but even if that's the case, which it can be, I would still expect that, something like this might be what follows up, right? Let's extend this as well. Don't forget, we can go all the way back and retest this broken channel before we can actually resume to the upside. Now, I'm not gonna spend much time talking about the FX markets. Blake has covered them, more than adequately. He's the master of FX, and although I didn't have the luxury of listening to the webinars, I'm pretty sure he talked about some overthrows that we had, so on and so forth. So yes, some of the currency pairs do show us that they've probably posted important reversals. But as I've said before, there is one element missing for those to unfold in a manner that's going to be a lot more aggressive, and that is risk assets to actually give up, bulls to finally capitulate and accept that, okay, there has to be some kind of a healthy correction. The VIX, as long as I was away, hit the target we were talking about, this 30-31 horizontal support resistance area. It has pulled back since, although it's obviously still elevated in comparison to the previous lows. That divergence did play out because the VIX did keep diverging. We kept posting higher lows, and adding to that, as I said that day when it happened, the next day actually, we also did have that deceiving bearish day, which actually managed to close the VIX at a multi-year low on a daily closing basis. And since then, we never looked back. We in essence invalidated that false close lower by posting higher lows all the time, and then having this very nice massive move higher at the end of last week. It was on Thursday, if I remember right. What was it? Wednesday, Thursday, whatever it was. I don't think that's the end of it. So I don't think we've seen the end. The VIX is slowly starting to come back to life. And I think it's a matter of time for us to see a higher spike. I would more or less bet that it's a matter of time for us to see the VIX sooner rather than later test the 45 area as well. Now, I don't know how long that's going to last, because in general, I expect, you know, a very strong response from the Fed. And I do think that the market is going to play ball once again. So, you know, my initial thesis, probably a sharp corrective move lower, that's not going to be that prolonged, you know, remains my main case scenario. We might have seen the beginning of it. I think we'll know soon. I think we'll probably even know this during this week. I don't know what the trigger is going to be, and I really don't care, because, you know, it's not about fundamentals. If it was about fundamentals, we would never have even made it to like 4,000 S&P.
Hey, Steve, you used to keep a chart of the S&P compared to NASDAQ, and I was wondering
Yeah,
what that
absolutely. I
looked
still have it.
like, you know, after the recent.
NASDAQ to S&P, to be exact. Here it is.
Yeah. Okay. Yeah. See,
Yeah,
that's
NASDAQ
a
to
big
S&P
deal.
produced one more high. It might be terminal because it was after
Yeah.
a triangle, right?
Right.
So it satisfied the minimum target with
Yeah.
coming out of a triangle, which is a new high. We did that.
And then, yeah,
We
and
did
then
produce a
negated
new
the
high.
breakout. Yeah.
Then negated the breakout. I think it's going to be even more important if we actually break through 3.26. I remind you that 3.29 was the
2000.
2000 bubble highs, right?
Yeah.
So it's not, I mean, somebody can see this move and be like, I missed the top. You know, you zoom out in this chart and you realize that if this thing turns around, you know, you haven't missed anything. You know what I mean?
Yeah. Just starting, really.
Yeah, it's like a blip in this chart, right?
Yeah.
So for me, it's more important if we break through this like horizontal support area at 326 and actually start producing lower lows after a period of who knows how long. I mean, really, who the hell knows how long it's been? I think that's going to be a very, very, very important technical development there, and probably not a bullish one overall for the markets, considering when this bottomed out and, you know, so on and so forth. Do we have an interview, by the way, today, Dale?
My bad. I think I wrote down the wrong Twitter handle. So we promoted, I don't know, some housewife to come and talk to us today. So
Okay.
no interview today. My bad.
Okay. Okay, you never know. Housewives sometimes have very interesting stories to share.
Yeah, if you're here, analyst, give me a give me a shout. And the real guest never contacted me, so we'll just have to move on to tomorrow. I have old timers disease.
Okay, let me see if we have any questions. What do you make of CBs trying to control yields, RBA? And that's not a new thing, Len. What I think of it that it is the usual tactic of kicking the can down the road. It's going to end in a huge disaster. But so far it's working. So, you know, they have the satisfaction of thinking that what they're doing is actually effective. It is effective in the short term, but in the long term, the implications are going to be horrific, because what they're doing is that they're postponing extremely big problems and making them even bigger. And when the situation is not anymore controllable by all these measures, it's going to blow up in a really spectacular fashion that's not going to be fixable without some type of a really big reset. Now, it's extremely hard to time when that's going to happen, but until it happens, the market still dances with the music and playing the game of dancing chairs. Now, of course, as Warren Buffett has said, when the tide recedes, you find out who is swimming naked. And unfortunately, after such a prolonged period of moral hazard and very, very bad economic management, I'm pretty sure that the vast majority of investors are swimming naked.
Oh, I'm so embarrassed.
Yeah.
Shrinkage. Anyway, Steve, tomorrow we have Ronit with us. And guys, if you want to see the most esoteric technical work of how he compares things and cycles, he's from India, and he's very big into these time cycles and market relationships. If you follow me on Twitter, you see I retweet his stuff all the time, but he's also nailed some pretty big calls. So make sure you're here tomorrow to see what Ronit has to show us.
Now, to answer a few more questions, we had a question about USD INR. It's not easy. Probably we need to redraw it a little bit. That has had an interesting false breakdown and a massive reversal higher. So I would be very, very careful here, because this has all the elements of a likely massive move higher considering the false breakdown. So watch out for this trend line. I think if we break above it, given this massive reversal, we might see a very, very big move to the upside. We also had a question about the Nifty, and then we have some crosses we can have a look at before we wrap it up. What was the other question? Yes, the Nifty. So let's see, Nifty 50, Nifty. So Nifty remains, well bid. So far, the move lower seems corrective. So nothing more to add. I mean, it remains to be in an uptrend. Yes, we have a lot of divergences, but not a real breakdown yet. So, keep that in mind. Now, having to do with the crosses we talked about, and this is a good example of what we were talking about, a week ago. You remember when I said that, in order to see a reversal in these markets, you need to see risk off. Just look what happened the 2 days that we had, pressure in risk assets. Look what happened to the Eurozone. In essence, it jumped 500 pips in 2 days. That's what these pairs do, right? So when we broke through this flag, my next target was there. So we reached exactly this target. We rebounded, we retested this support resistance area. I think it's extremely likely that there is at least one leg missing, right? So I do think that we're probably in a downtrend that might continue for a much, much longer period of time. But in the short term, I don't think we've seen the end of this rebound in neither of these two pairs, okay? So be careful. I think there's more to go, most likely. Anyhow, doctor's instructions. I should not be spending a lot of time sitting in a chair.
Go rest.
So no, I have to walk around a little bit, lie down a little bit, and I'll be back for the next webinar. Okay.
Great to have you back, Steve.
Great to be back.
It was like a hole in the team without you for a week.
What actually happened? I had, I think you call it, it's a Greek terminology, of course, pulmonary embolism. Yeah, that's what happened. Pulmonary, that's how you call it. Pulmonary embolism, yeah. Pneumonas is the lung in Greek, and embolism is emboli. So it's both Greek words. Pulmonary embolism, yeah. Nobody knows why. They gave me a
blood thinners.
$15,000 worth of exams, so on and so forth, and we haven't found the cause. Sometimes you don't. So that's what happened. Anyhow, I made it, and I'm alive, and that's what matters.
Well, it sure does.
I'm actually both unlucky because getting one at the age of 40 without having any real underlying health issues is not a usual thing. In the other, on the other hand, I was lucky because it wasn't a one-off. Otherwise, that would have been it. So now I need a few months of injections so I don't get more of those clots, and I should be as good as new.
Better.
I don't know about that because we keep growing older, but yeah, let's say as good as new.
Okay, buddy.
I'll be fine with that. I'll settle with that.
All right, and as Steve, feels today, remember everyone, don't just count your pips, count your blessings, and your health is your wealth.
Yeah, and don't forget that positively thinking is always in your favor, right? I mean,
Yeah.
I had a positive attitude to the whole thing because believe it or not, it really works. I mean, your spirit, your brain, your soul, and your body are interconnected, right? That's why there is what is called psychosomatic symptoms, right?
Yeah.
And that's why the ancient Greeks, which fortunately were extremely wise, unfortunately their not predecessors, predecessors, the generations that followed are called predecessors.
No, that's before predecessor.
Okay,
Ancestor.
the ancestors. You're right. We're not equal. Are not equally wise. Had a saying which was nous iis and soma tiii, which meant that when the mind is healthy, the body is healthy as well.
Yeah.
And vice
It's
versa.
like the word disease, dis-ease.
Mm-hmm.
Not at ease. All right. Well, everyone's happy to have you back, Steve. Don't push it, and we'll see everyone tomorrow. And
Yep.
be here for Ronit, and also the new name of the is the Morning Edge Show. Can I announce that?
Absolutely.
We're
Absolutely.
calling this the Morning Edge with Blake, kind of rebirth of what he did for many years. That's the second webinar. Join Blake and the team for the Morning Edge in about half an hour.
Yes, 33 minutes. Have a
33.
wonderful rest of the day.
You too, Steve. Adios, buddy.
Bye-bye.
Great to have you back. Missed
Great
you.
to be back. I missed you too all.